So what if you started Forex trading with just $100? No big account, no light trading capital, just a small amount of money and a simple strategy to turn $100 into $1,000. And that sounds exciting, right? But here is the real question. Is it actually possible, or is it just another Forex dream people talk about online, right? So I decided to test it. I started a $100 Forex challenge with a clear target: grow the account step by step and see how far it could go. No crazy risk, no gambling trades, just a realistic trading approach. And in this video, I'm going to show you the strategy I use, the rules I follow, the mistakes I made, right? And what actually happened to the account. Because if you are starting Forex with a small account, this might completely change how you think about trading. Now, number one, the rule of the challenge. Before starting the challenge, I created strict rules. Why? Because most small accounts fail due to poor risk management, not bad strategy. So here were my rules. Rule number one, never risk more than 2% per trade. With a $100 account, that means risking only $2 per trade. Rule number two, only trade high probability setups, no emotional trades, no revenge trading. Rule number three, focus on consistency, not speed. The goal was not to flip the account overnight. Am I understood? The goal was to grow it step by step, because retrading is not about getting rich quickly. It's about surviving and improving over time. Smash the like button. Join my Telegram community. The link is at the description. If you want one-on-one mentorship, the link is also at the description. james-gides.com. In the first week was interesting. At the beginning, I was extremely careful. Every trade felt important. If you are trading a small account, even $2 loss feels noticeable, right? But that is actually a good thing. Small account force you to develop discipline. During the first week, I took only few trades. Some were winners while some were losers. By the end of the week, right, the account had grown slightly from $100 to around $108, right? Not a huge profit, but a good start. Because in trading, small consistent wins matter more than big risky ones. Now, temptation to over trade. Now, something interesting happened during the second week. The account was slowly growing, and that is when a dangerous thought appeared. What if I increase my risk? What if I increase my lot size? What if I take bigger trades and grow the account faster? Now, this is exactly where many traders blow their accounts. Understood? So small success often creates overconfidence. But I reminded myself of these rules. Stick to the plan, never risk more than 2% per trade, and that decision probably saved the account. Because during the week, right, I experienced a few losing trades, but thanks to proper risk management, the losses were small, right? The account dropped slightly, but it still survived those losses. Now, the strategy I used. Many people believe the success of trading depends on complicated strategies, but the strategy I used for this challenge was actually very simple, right? I focused on three things like trend direction, right? Support and resistance, price action. Instead of trading every signal, I waited for the market to show clear structure. Now, for example, if the market was trending upward, I look for buying opportunity near support. If the market was trending downward, I looked for selling opportunities near resistance. And this simple approach helped filter out many bad trades. Now, sometimes the best strategy is not the most complicated ones. I always say it's the one you can execute consistently. And the third week, momentum. By the third week, something interesting started happening. Now, the account began gaining momentum. A few good trades pushed the balance higher, like 115, then 124, then 135. This is where discipline becomes even more important, because when traders see profit, right, they often become too confident. They increase risk, right? They take unnecessary trades, and suddenly the profit disappears. So instead of getting excited, I continued following the same rules, the same plan, the same strategy, same pattern, same patience. Consistency is what allows small accounts to grow. My reality check. Trading is never a straight line. During the fourth week, the market became difficult. Several trades didn't go as planned. The account experienced a small drop down from about 140 it dropped back around 128. Now, many beginners panic during moments like this, right? They abandon their strategy, they try something new. But the truth is, even good strategies have losing periods. What matters is how you respond to those losses. Instead of reacting emotionally, I analyzed my trades and continued following the plan. So what happened to the $100 account? Did it reach $1,000? The truth is, not yet. But by the end of the challenge period, the account had grown to around $160. Some people might say that is not impressive, but here is the important part. The account survived, right? It grew steadily, and most importantly, it followed a disciplined trading process. Like turning $100 into $1,000 does not happen overnight. But consistent growth is what eventually makes it possible. This challenge taught me 3 powerful lessons. First, risk management is everything. Even the best strategy will fail without proper risk control. Second lesson, patience beats excitement. Right? Many traders lost money because they chase fast profits. Third lesson, consistency builds confidence. When you follow a clear plan repeatedly, your trading becomes more stable, and stability is what leads, right? It's what leads to long-term profitability in the Forex market. So how could someone realistically grow $100 to $1,000? The answer is simple, right? Not through luck, not through gambling, but through compounding and discipline. If a trader consistently grow their account by 10% per month or per week, right, the account will gradually expand as the account grows. The dollar profit become larger. That's how professional traders think. They focus on percentage growth, not emotional wins. Here is the advice for you, the beginners. If you are starting forex trading with a small account, here is my honest advice. Treat your small account like a training ground. More understood. Focus on learning how to control your emotions, how to follow a trading plan, how to manage risk. Because once you develop these skills, the size of your account becomes less important. A disciplined trader can grow any account, but an undisciplined trader can lose even a large account. You can grow $100 account to $1,000 account. It is very, very possible. And not through luck and not through reckless trading. It happens through discipline, patience, and consistent execution. Every successful trader you see today once started with a small account, right? The difference is that they stayed committed to the process. So if you are starting your own trading journey today, remember this clearly. Am I understood? Your goal is not to flip your account overnight. Your goal is to become the kind of trader who can grow any account over time. Because once you master that skill, the numbers eventually follows. Join my Telegram community, or if you want to join my mentorship program, you can also click the link at the description, james-gides.com, and see you guys in the other side of life. Peace.